I think they're going to print early and print often, which is why we're already seeing Besson supporting, the treasury at 4.75%. Like the U.S. economy is great. It needs a higher interest rate. There's no reason why, why 5% should be a problem. I think that we're not going to get sort of a 2008 style, like massive credit event, but we're just going to continue print and print and print. And you're going to look up and see, Bitcoin at 250,000. Like what happened? There wasn't really a financial crisis. But, the Fed in its own way is printing money. Scott Besson in his own way is printing money. The Japanese are doing it, the Chinese are doing it, the Europeans are doing it, all to sort of make sure that there's not this coordinated global credit event like we had in 2008.
The global financial engine is revving past the red line, and the architects of our economy are terrified of taking their foot off the gas. Forget the tired narrative that Bitcoin needs a catastrophic Lehman Brothers-style collapse to reach stratospheric heights. Arthur Hayes just delivered a blistering wake-up call to the market, laying out a fiercely aggressive timeline where Bitcoin rockets to $250,000, not because the system breaks, but because those in power simply refuse to let it. We are staring down the barrel of a relentless, politically driven money-printing machine designed to paper over the cracks of the largest capital misallocation in human history. The warning signs are already flashing in plain sight. Treasury Secretary Scott Bessent is maneuvering to suppress long-term borrowing costs, while global central banks quietly orchestrate a synchronized defense against crushing debt burdens. But the real powder keg lies buried beneath the unstoppable hype of the AI revolution. Trillions have been hurled into data centers and tech infrastructure, completely crowding out other assets. When that staggering mountain of debt inevitably collides with disappointing reality, the political elite will face a brutal choice: allow a devastating cascade of losses to wipe out pension funds, or flood the system with unimaginable liquidity. Hayes is betting everything on liquidity, and that makes the setup for Bitcoin absolutely explosive. The very capital that abandoned crypto to chase the AI gold rush will inevitably seek refuge in a truly scarce asset. By moving preemptively to drown the inevitable AI credit crisis in fresh capital, policymakers are inadvertently loading the spring for Bitcoin's most violent upward expansion yet. It's a stealth devaluation of everything, and Bitcoin is standing right in the blast radius of this impending liquidity wave. In this video, we are tearing into Hayes's unapologetic breakdown of Bessent's treasury maneuvers, the terrifying fragility of the AI debt bubble, and exactly why this inevitable rotation of capital could catapult Bitcoin to $250,000 before the masses even realize a crisis was averted. If you are serious about front-running the macro forces driving this market, smash that like button, subscribe to the channel, sound off in the comments, and hit the notification bell so you never miss an update. Let's dive straight into Hayes's explosive analysis.
Scott Besson, he wants to play games. He says that he is going to bring liquidity into the market. What's going to happen here?
As they always do, he's going to print the money, just like his predecessor, Bad Girl Yellen. Buffalo Bill Besson's going to give us those Besson bucks, and we can buy whatever we want to buy, whatever makes you happy. I mean, it's really strange because if you take a look at the actual upsize, it was like 20 billion over the scheduled amount, which is like irrelevant in terms of the size. And like Besson's not a fool, right? This is a guy who, in coordination with Druck and George Soros, manipulated the pound to force the Bank of England to cave. So I can't imagine that he thought that this was going to be the end of the game. But at the end of the day, if he's like telegraphing to folks like us, like, get ready, start buying shit because it's coming, then I think he's done exactly what he wants to do. And the Druck AI slop piece in the Wall Street Journal, I read it. And I think Citrini had an interesting tweet about like, Claude, make me a criticism of the Treasury Secretary. It's like, obviously Druck didn't write this whole thing. He put it in some sort of AI. But I don't know. I mean, one of my friends is like, yeah, Druck's been trying to make the fiscal situation in the US a political issue for 20 years and nobody gives a So I'm not exactly sure why this time is going to be any different. At the end of the day, we need to listen to the politicians, just like we listened to Yellen. They're going to print the money. 5% is the level. They will not allow it to go above that, and we should trade accordingly. I think the best theory that I have heard is that Besson would love it if the pressure was taken off of him, right? Because at the end of the day, he's been very vocally criticizing Janet Yellen and a lot of other people who had his job about why they are issuing all this short end debt is creating all these rollover issues and, all sorts of things. And then he does the same thing, if not in bigger size, when he gets into the job, right? Because there's only one way to do this. His boss, the president, wants to print money to do stuff, and he's got to do his job, which is find a way to pay for it in an affordable manner, which means all these things, these technical things that they do in the markets to make sure that the markets are well functioning. So it would be great if they stopped spending as much money. And so I think that there was one theory that Druck probably did give Besson a call. And he was like, great. Yeah, the more pressure that we can put on the domestic politicians, both Republican and Democrat, to say enough is enough, let's stop spending so much money, that just makes my job better. It makes me look better, right? Because Besson, to anyone who's in finance, looks like a fool. Like, you literally 18 months ago were telling us how Janet Yellen is the biggest idiot around, and you're doing exactly the same things that she did, if not in bigger size. So his professional credibility has been destroyed by the fact that his boss wants to print a bunch of money, and if he wants to stay the Treasury Secretary, he needs to find a way to pay for it.
Do you think that the response is going to be sustained across, Bitcoin and gold, or do you think that there's still the chance that this is kind of a short-term pump and we could see the lows again?
I think the only way this is a short-term pump is if you believe that Druckenmiller got through to Republicans and Democratic Congress people and senators who are running for re-election and like, okay, I'm no longer going to offer free shit to my voters to re-elect me. Now, if you believe that, then this move in Bitcoin and gold might be overdone and we're going to go back down again. But if you believe that politicians want to offer free shit to their constituents to get reelected, then this is only getting started, because the buyback didn't solve the problem. It just put a spotlight on it. And now they actually have to do something to get the yields down, because I don't know what the 10 years at now, like 470 something. Hasn't really done much. 30 years still at 5.25 or a little bit above. So again, they've done absolutely nothing. And so now it's time to actually start printing some real money.
The reality Hayes exposes here is harsh and undeniable. The Treasury is trapped. Politicians will never stop demanding capital, and it falls squarely on the Treasury Secretary to keep the illusion alive by making that insurmountable debt look affordable. Besson's maneuvers aren't just technical adjustments, they are acts of desperation designed to keep the borrowing machine from stalling out. The mandate is clear: print the money, suppress the yields, and keep the plate spinning no matter the long-term cost. But this desperate need for liquidity takes on a terrifying new dimension when you look at where the market has recklessly dumped its capital over the last 2 years. The AI boom hasn't just been a technological leap, it has been a historic debt-fueled spending frenzy that hijacked global liquidity. Now, ask yourself, what happens when those euphoric AI returns fail to materialize and the debt comes due? Hayes breaks down exactly how this impending capital misallocation will force the government's hand and send that trapped capital screaming back into Bitcoin.
What's your kind of view as to Bitcoin as an asset, and maybe what should we expect over the next 12 months?
So I think that Bitcoin got the stick because AI took all the credit. The marginal dollar or yuan or euro or yen of liquidity went to AI, and that's still happening to some extent, but now we've moved past that. But yeah, if you're talking about 2024, 25, people were just funding data centers and, equity investments in all these AI companies. And, Bitcoin was, the ugly stepchild. Oh, you're supposed to be this like money printing heads are printing all this money, but it's not going up. But, Micron is up 50x. I guess I'll just do the AI thing. And so I think that's what really impacted Bitcoin. And obviously 2025 was a massive year of increase in the amount of debt issued for the AI trade. And that definitely crowded out the markets. And obviously we're seeing it in the government bond markets as well. AI debt is crowding out government bonds, and it definitely crowded out Bitcoin as well. So I think that's why even if you take a look at the 125,000-ish all-time high, it was barely 2x over the previous all-time high, which is, not spectacular in terms of a Bitcoin bull market versus the previous ones. And so now that we've down 50%, I think that we're going to enter the capital misallocation phase of AI. And I think people are starting to realize that there's going to be lots of money given to try to roll over debts, to paper over the fake accounting that's going on. And that liquidity is going to find its way into Bitcoin, because I think people recognize that, hey, maybe these AI companies don't earn their return on capital. Maybe these adjusted financial metrics are completely just lies. But because they're private companies and we don't really see, they get to say these things. Anthropic and OpenAI claiming that they're profitable. I don't know. I bet they're not. When you actually get the proper GAAP accounting metrics. So I think that as more and more liquidity is pushed in AI to basically prove that the politicians didn't make a massive up by supporting this as government policy, that money is going to find its way into crypto. And so Bitcoin is going to do very, very well.
If we get a 50% drawdown in a bear market instead of 85, does that mean that the appreciation in the next bull market will also be muted?
I don't think so. I think that, and I've written about this, the AI bubble is the biggest CapEx bubble that we've ever done as human history. And so the eventual, and it will always happen because we're human, we're just optimistic entities. It's going to be huge, the amount of money that's going to have to be printed to save the system. Because if you think about it, every time you have one of these AI debt deals, at the end of the line is a pension fund. It's not very clear that that's happening, but that's what's happening with where all this credit is getting stuff. The riskiest stuff is going to end up on the people who can least afford to stomach these losses. And the politicians are just not going to allow that to happen. I'm not sure if we're going to get a sort of a Bear Lehman sort of setup where they let some firms fail. I don't think there's any appetite for that. I think they're going to move to print the money way sooner than that because they don't want to revisit a 2008 and actually have like a public reckoning of the complete retardedness of these politicians and how they supported this AI thing and misallocated this capital. So I think they're going to print early and print often, which is why we're already seeing Besson supporting, the treasury at 4.75%. Like the U.S. economy is great. It needs a higher interest rate. There's no reason why, why 5% should be a problem. So I think that we're not going to get sort of a 2008 style, massive credit event, but we're just going to continue print. And you're going to look up and see, Bitcoin at 250,000. Like what happened? There wasn't really a financial crisis, but, the Fed in its own way is printing money. Scott Besson in his own way is printing money. The Japanese are doing it. The Chinese are doing it. The Europeans are doing it. All to sort of make sure that there's not this coordinated global credit event like we had in 2008.
Hayes is mapping out a completely unprecedented trajectory for this bull market. The market has been conditioned to wait for the sky to fall to expect a devastating crash and widespread panic before the central banks ride to the rescue with rate cuts and quantitative easing. But that playbook is obsolete. The political class is utterly terrified of a public reckoning. They will not wait for the collapse. They are going to intervene aggressively, refinancing troubled debt and injecting relentless liquidity to smother any spark of a crisis before it can ignite. At the dead center of this engineered rescue is the colossal AI investment cycle. The sheer magnitude of capital hurled into artificial intelligence has chained the broader financial system right down to the pension funds of everyday citizens to its success. If these AI titans cannot deliver the astronomical profitability required to justify their valuations, those losses cannot be allowed to materialize. The political fallout would be apocalyptic. Instead, governments will deliberately choose the silent theft of inflation and currency debasement over the deafening crash of a credit default. This is the exact moment Bitcoin reclaims its crown. As the smart money realizes the AI hypergrowth story is stalling out, they will desperately search for a lifeboat. Bitcoin is the ultimate antithesis to the AI bubble. It has no fabricated earnings reports, no bloated management teams moving goalposts, and no central authority capable of diluting its supply to bail out bad actors. It is absolute digital scarcity in a world drowning in printed abundance. The capital that chased the AI phantom will inevitably slam back into Bitcoin. Arthur Hayes' $250,000 target isn't some arbitrary moon math. It is the mathematical consequence of a system that refuses to take its medicine. We are accelerating toward an era of permanent, preemptive monetary expansion, where avoiding the pain of a recession guarantees the destruction of purchasing power. The floodgates are opening, and Bitcoin is the apex predator of a high liquidity environment. If this breakdown armed you with the perspective you need for the coming cycle, hit that like button, subscribe to the channel, and share this video with anyone trying to understand the real macro game being played right now. Thank you for watching, and I will see you in the next one.